Alright guys, welcome to the channel. So today we are going to be hosting a live lesson on Fibonacci drawing tools and how you can use them properly. If you are listening in on YouTube, feel free to jot down any questions that you have in the chat window. We will try our best to answer all your questions at the end of the lesson. So just a little bit of information on me. My name's TJ. I started United Traders with a goal to demystify the capital markets and help people just like yourself build long-lasting wealth. I use a combination of fundamental and technical analysis to provide event-based, data-driven trading ideas. I started my journey as a financial advisor at one of the top big 5 banking institutions and soon found my way working in equity research and as a portfolio manager. I specialize in the US equity markets, and I have been involved in the equity markets for just over 12 years and counting. So what makes our community unique is the way that our members work collectively with a combined goal of making a generational shift in financial literacy and an abundance of wealth. After all, that is why you guys are watching today. We do this by taking a holistic approach in educating our members about personal finance, portfolio management, hedging uncertain times, psychology, risk and trade management, which ultimately will result in our members reaching their financial goals. So there's a ton of stuff that makes UT great. We offer a long list of free resources, but to be honest, the true value of United Traders is something that needs to be experienced more than it can be listed. But here are just 6 things that make UT what it is today. And if you are looking to join our community, best thing to do is joining our Discord community. It is free. There is a link on the bio, and don't forget to follow us on social media for more amazing content. It would be greatly appreciated if you guys could help us out by spreading the word to all of our followers. And that being said, I'm not going to bore you by reading out this full disclosure. However, I will mention that United Traders and or its members are not responsible for any investment decisions made using the information provided today. Trade at your own risk. You must make an independent decision regarding investments or strategies mentioned at United Traders. All right, and last but not least, I want to introduce you guys to John. So most of you guys probably know him by MyTakeAways. Now, John will be conducting the lesson on how to master Fibonacci drawings tools and incorporating it into your trading arsenal. He is currently working at a financial risk management firm, and John is a master at volume price analysis and has been trading for just over 18 years. Fun fact about John: while Martha Stewart was in jail, John bought Martha Stewart stock, which is MSO, at around $11 and was able to net more than 25% before she came out of jail. And John, I'll let you take over the stream and go ahead when you're ready.
Awesome. Thank you. So I'm going to share my screen. Are you able to see it?
Yes.
Good. So this is the default setting because the only thing we're going to be talking about, focusing on today, are the use of Fibonacci. Let's call them drawings, because in Thinkorswim, that's what they're defined as. How is a Fibonacci, ratio derived? Fibonacci was an Italian mathematician. He's considered one of the most talented mathematicians of the Middle Ages. If you guys have ever seen that funky looking spiral thing that looks kind of like a cross section of a conch shell that's been cut open, it's all about the theory that ratios recur over and over and over again. You guys can actually look that up on Google. You don't need me for that. And if you really want to know who Fibonacci was, etc. But I have about an hour to teach you how to utilize the tools and where to place the periods highs and period lows. So if you want to look into that, that's great. But it's not really necessarily going to help your trading. But the theory behind it is everything operates in a certain sequence and a ratio. Now, I use Fibonacci not to determine what I'm going to do, buy or sell. I use it only to chart out a period of interest. So it can help me to tell me what other traders might be thinking to do at a particular period of time or level of price in the future. Because if we're using Fibonacci for the past, it's not really helping us. What we're trying to do is project where price action could go next. So if we're looking at ratios of where we were to where we've gone and where can we go after that is all what this is about. You'll find in most stock a recurring level at 61.8%. You'll see it over and over and over again. This does not mean that that's the all end all. I have seen them go outside and up to the 50. I've seen the 78.6, and then you'll see a bounce off of that. A lot of times, you have to take everything into consideration. You'll see that same type of pattern where it goes to that same percentage level over and over again, meaning that if the markets are traded by algorithms, there could be some levels of algorithms programmed to do certain things at certain levels. It's just the way that they're programmed. And if we're following the way that big money is taking a stock or an index in a certain direction, we want to be aware of that. So I think the first thing and the thing I recommend everyone do is to go back as far as you can in history, in the history of your chart, and chart it, the Fibonacci's from that. So go to the monthly, go to 10 years, because you need to take the bigger picture into consideration and start to get a gauge of the algorithms and the buyers who are trading this actively. What are they thinking? So when you get to those certain particular key levels at the 100 line, the 0 line, where it be the 61.8, whatever it would be, you're watching for action or activity at that particular level. And that's all you need to be doing. This is not trading advice per se. I'm just saying, if you're looking at support and resistance, take these things into consideration in conjunction with that. So I am a volume trader. I trade off of volume is king to me. I only look at Fibonacci to tell me if it coincides with a particular level of consolidation and accumulation. And then I consider where it could go from there, if it goes above or below. This way, I'm never committed to being biased one direction or another. So without further ado, let's kind of go to a longer term time frame on this. I would rather, on AMD's been around for a while, and I picked a ticker that I hope you guys are comfortable with. I think a lot of people are familiar with AMD, and it's traded by a lot of individuals, so it's got a lot of volume there. So why would AMD ever go to a particular place on the chart? Sorry, I keep getting the ding in my ears indicating that I've got some kind of alert going on here. I don't know why. I'm going to go to let's do monthly. So from a technical perspective, why would AMD go from $1.61 to $100, give or take? Well, fundamentally, you guys could do all the research in the world, but does this make sense technically from a trader standpoint? That's what the Fibonacci is trying to tell us, is where can it go? One of the first things I would do, this is what they call on the Fibonacci's, if you pick it inside of Thinkorswim, this is the retracement. A retracement means a move's already made. And what you're looking for is where it could go back to before it goes further. So you're literally doing that, retracing. It's like if you ever lose your keys in your house, you got to go retrace your steps and go back to where you were until you find them. That's kind of what we're doing here. So you get to a certain point where shares are exhausted. The sellers they're done. Like the big money's been selling. The buying is exhausting. You can't buy anymore. We got to go back and recharge. So we're going to fall back to a certain level of what you could call it support and test that area. Well, what's that area? I think that's what you're going to tend to find, a 61.8% level on the retracement. Now, if we do the simple retracement, and then we'll get into extensions in a little bit, I'm just going to take it from the period low to the extreme period high. And one thing I will caution on any ticker ever, if you're setting a period low to a period high and you don't know that this is the ultimate high, which I just did, you're doing it wrong. The fact is, I don't know if AMD is going to go higher or not. So I should not actually technically draw that level and start anticipating trying to buy it, down in here somewhere. In fact, in this case, you're going to go period high to a period low. Oop. That's where it would trace, is actually from the period high to the period low. Anyway, it doesn't matter how you draw it. This area here is where you're going to end up wanting to buy if it holds that support level. So anyway, if we take profit, if this ends up being the high, so just bear with me here. If this is the ultimate high, it will never again see 96.37, and it's all going to be profit taking from here. On the bigger picture, monthly candles over a period of years, this is ultimately going to test that 50 level again, 48.78. Again, these things have to be true. That has to be the period low, which we know. This has to be the period high. If it goes anything above this, it invalidates everything I just said. So strictly for the purpose of charting, I'm just going to assume that that's the period high. Say we knew it was. I'll leave it. This area is where you would typically see it test the 50. Anytime you get sideways consolidation in here, which can be very common, it will move around in this area for a while and then break out again. A lot of times you guys would refer to that as a pennant or something along those lines, okay? So everything has a specific name for it. It could go sideways forever, drop and come back up, or it could simply grind down into a flag and then break out again. But why does it do that, and why are those particular levels important? Because of this. If you look at what I did, I just took it from here to here, but look at the lines in between. That had absolutely nothing to do with me charting in between. I just simply took it from the period low to the period high. Look where it dropped back to. Repeatedly, right? It's moving around in this ratio area is all it's doing. Why would it jump up like this? Why would it go from here to here? Well, this was obviously a key area multiple times. See this right here, these candles? And when it finally decided it was going to break above, the moment it broke above this particular ratio level, it was off to the races. There wasn't any question as where can it go? This was the next level in percentage wise. If you're trading Fibonacci, here to here, you're not going to find a lot of resistance on something that's never been there before. So this is, again, all theory, but it kind of proves itself out in this particular case. So here, we've gone and we've broken above, and the next candle just said, we're not going to get rejected off this level. It's just going to go up and try for the zero line. Again, I can draw the zero line because I know it already exists. So what would happen if I didn't know this zero line existed? I think that's a good question. So let's take what we knew to be true before this happened and see if this actually plays out at all. I'm going to do now what's called an extension. What an extension does is to help to develop an idea of where it could go in the future. Now, retracement is simply to help us gauge where it could go after the move is already made. Well, that's all fine and good, but the extension is going to help try to give us an idea where it could go after the move is already made, but into a future tense, not on the same, in the same ratio. So I don't want to get confusing, because I'm actually, sounds confusing in the way I said it. If I do from a period low to a period high, so say for instance, we're in 2016, I'm charting AMD. It's really got a long period of consolidation here, and I try to gauge where could it go and where would I take profit at. So if I had a period low to a period high, and so far we haven't even gotten into 2018 yet, I now know that this is the period bottom. Why do I know that? Because this candle here broke above the prior period's highs. It's already tested and passed. Even though it rejected on it, it looks good to go. Where do I take profit? 61.8 is the typical norm. If you go beyond the 61.8 on retracements, that's when it's pulling back. A lot of times the market makers took too much profit, and it could end up failing all the way back to the 100 line. When you have the opposite here, where we're projecting out to the future, it's retracing if you're short, in theory. If you were short on AMD stock, you've taken a lot of pain here trying to remain short. You would definitely, if you try to short it right at the 61.8, you got blown out, basically, because all it did the next month over was just run right up past the 100 line, all the way to the 161.8. Because once it gets over the 100, this is a key area. You could kind of look at this as, I don't want to say support, but it's going to be an area of interest that could be a recurring theme in the future. Why? Simply because of the ratio, right? And anybody who's using the Fibonacci's as a point of interest is going to be placing trades at these key levels to buy and or sell. So when you're getting a volume profile, and as you guys like to use the volume profile, and you notice it's never smooth, right? It's kind of got a lot of sort of like extensions that move out where it looks like a bunch of fingers moving out from the side. I don't want to mess too much with a volume profile in here, but you would get the idea of, you'd kind of see it doing this, where more volume happens at certain areas than others. And then you have these gaps. Why do those gaps exist? And why would you have more volumes at certain price levels than others? This has a lot to do with it. The Fibonacci's do. You'll see it over and over and over again as you get familiar with charting them from period low to period high to period low. And once you have made a move and you've kind of gotten to where you have set your targets, I would have taken profit on this candle. But when it broke above, you were good to get back in from Fibonacci theory to hold the 61.8 to break above the 100. So that would have been a trade that if I'm only using Fibonacci and no other thing to trade this, I would have taken this trade right here on this candle when it tested this candle and the 61.8. It's time to get in. My next level of selling is probably going to be up here at the 22.99 level. It went right through it, which is great, but it went actually to the 161.8 and even tested that twice over a 2-month period before it pulled back. So now we have a period high. So I can actually do it again. This time, I'm not going to go from this period low. I need to know from the period high, how far back are we going to go? And we can already kind of see on this chart that I've already done, this Fibonacci, where it went. But this is old. I've already used it. If I want to leave it on there, you guys, you can, because you'll see the ratios over and over again can matter. And when you get multiple time frames and multiple Fibonacci's that kind of overlap each other, like a very key zone overlaps with another key zone from a different time frame, you'll start to see more activity and volatility in that particular zone. So that being said, rather than fill this entire chart filled with Fibonacci's all over the place, I'm just going to make a rectangle in that key zone right in here. It's just going to be green. Okay. So that's a key zone for profit taking. And it's definitely one of consistent interest. I'm going to now remove this Fibonacci. And I'm going to draw a new one. You guys kind of see what's going on there, what it comes back down to. What was once resistance becomes support, right? So if you take this same box, I could easily just move it over here and look, this was resistance all the way across. All right. So this all works together in theory, but let's take a look now where it should go or could go next, now that that move has already been made. So we went low to high to low. Now we go period high, which is not much of a high now in contrast in retrospect, to low, to now our new high here. And where can it go from that move here to here? Actually, I need to move it a little bit down just a hair. Okay. In ratio from where it was to where it's going, it made quite a drop back. So when profit was taken, and this thing, I would consider this overextended, if you will, because it went on quite a nice tear. It had to pull back to recharge. To what level? Well, if you're looking at volume and you're looking at support, this makes a lot of sense, but it also lines up with the 261.8 on the Fibonacci. Would I have set that as a target? No, but I would have known that in this box right here, once it failed this zone, I got to go back to the rectangle here. This little area right in here. Okay, in that Fibonacci zone. Once it failed that zone to bounce, it's not a trade I'm going to be in. Okay, if we're looking at monthly candles, this happens over a very long period of time. This is over 30 days, but this is not a trade I'm looking to long. We're not going higher until it can retake that level. So I'm going to get out of this and I'm going to remove that. Okay, so we're creating zones now based on that 61.8 and the 50 is all I'm doing with these boxes, these rectangles. Now that we've made that move, period low, high to low to high, we can now go period low. Oop. Forgive me, I gotta keep changing the drawings back. All right, low to high to low. Now on these candles, if you did it from the first candle here, okay, that's that first test of this support zone. This is a whole month that's gone by. You come right back down and test it again. So I would have zoomed in a little bit right here. You get two tests of that zone. It does not break above the 23.6 on the following month, the consequential month. So if it fails to break above, if you're trading this for a long-term position, you can kind of expect some level of consolidation. You should. I mean, it just blew through all the volume that it had accumulated over here in a relatively short period of time. So it comes back to accumulate. It's testing the support zone. But where do I want ultimately on a long position to start taking profit or start taking profit, guys, is from the period low to the period high. And I'm a little bit off on this here because I've zoomed in. Back to the period low, here's that 61.8 and the 50 again. Well, it's right where the 100 essentially was before. Now we had broken above the 100 a little bit here, but now we can actually see in the same zone is now becoming even more key between the 61.8 and the 50. Why? Because after a retracement, if I'm buying down here, I'm going to try to take some profit off the table in here, at least some. If it can blow above this 61.8, I'm good to the 100, just like I was before. We saw that. And I was. But I'm going to take profit at 61.8 until it can prove to me it can break out of this, because if it fails, I'm likely going back to this zone. So the only thing I've done here from that period to this period to this period, and we're on this month here, this is October of 2018, is try to determine at what point I'm going to take profit off the table. And I would like to take profit at where it failed first, okay? Clearly a failure of the stock price in this month, and an overlapping Fibonacci ratio, all coinciding in this box. So now I'm actually, what I do is take the box and just extend it out, because this is now becoming a period of support and or resistance. Right now, because we're down here, this is going to be resistance. I like to draw it in red until it's green. It has to break above. So now that we've gone there and we've actually made it to the 61.8, you see what we're doing here. Okay, so you got some profit taking, but it's not failing. It's holding this zone, and it's holding it pretty well. And we got one final test down after multiple tests, actually, where we can't break above the 78.6, and it doesn't even bother in the following month. It's just gone. Gets up to the 100, pulls back just a tiny tad, and then we just keep going. And once we're above this line, we're going to keep on running. Where to? Let's try to gauge. If you can't tell, I use extensions a lot more than anything else. Why? I do it to set targets of consideration. Now that we've made that move, this Fibonacci, I really don't necessarily need it anymore. If you want to leave it, some things that you can do on this particular one is just go in and remove the check marks that aren't necessarily relevant. Maybe you leave these on there. You could just kind of do that. You could make them smaller, make them, hashes or something like that. Something similar. So that way it's not in your way of what you're trying to do. And otherwise you get it up with so many lines in your chart into the future. You're like, especially when you move to the daily, it's like, well, what am I looking at? What ratio, what time frame was this on? So if you do want to change the color, you can change the type of line and make some modifications on your own personal indicator on that particular time frame. Can help, so that when you're looking at it at a more of a broken down time frame, you'll be able to see it in a different way, and you'll know, oh, yeah, okay. So what things to consider is we were looking at a period of almost a full year to make this move here. So you're sitting on AMD that you bought it, into the $17, $18 range, and you're going to be selling, and you already know I'm going to be taking profit around 30. Do you buy more? Do you get back in? Question. And the answer is, well, in hindsight, yes. But when it does not break down from this level, that's what you do when you're trading a stock. If you really believe in a company and you bought it for a reason, and you believe it can go higher, you can add on to that position. But this is a period of 1, 2, 3, 4. I mean, you got 5 months. You're just basically trading sideways here, trying to figure out, are we going to go higher or not? And until you know, this is their next target. And then also, what would be your target to the downside? So that would be where I would chart next. So if we had a period high to a period low, I would go to what I knew to be the high here. When this particular little candle here did not break above, it's now telling me that I have a period high that is defined. So I can draw that. So my target to buy would have been down in here between this 50 and the 61.8. This is where I would wanted to have bought on a shorter time frame. The longer time frame on this is winning to me. Understand? Like in the monthly, instead of just trading this little move here in the course of this year, from the bigger picture here, we can clearly see this level holding. So something that you do need to consider when you're doing Fibonacci's is, who am I trading against? Or who am I trading with? How long are they going to be in a position? What is their ultimate goal in the stock? Because I don't have the account size to push AMD wherever I want it to go. But conglomerately and together, retail has a say, but big money is going to decide where this thing's going. And we just need to follow wherever they're going. So if their Fibonacci's are programmed into their algorithms, this is something I have to look at and I have to consider. And looks to me, this particular stock, the answer is yes. Fibonacci's has some kind of say in what they're intending to do in particular in strategic levels. So if I take that into consideration, I didn't get the pullback. I don't need this. I'm going to remove this drawing completely. We're still utilizing this particular Fibonacci we already had drawn. So now I can actually go from when we broke above this level and beyond the 100 in here, now I have a new period high that is defined. So I can go period low, I'm sorry, high to low to high. So where would I pull back to? High to low. This isn't a period high. I could have drawn it from it, but it doesn't work on the longer time frame. On the longer time frame, this can work. Where could we go from here, right? So if I attained all the way up here at this 161.8, we got there. And you can move the Fibonacci around a little bit if you want, but this kind of falls within the same sequence. I'm going to expand it out a little bit here. You have overlapping hundreds. This zone. Would you have gotten stopped out here? Yeah. You could have gotten stopped out short too. This candle can matter in the future, but the zone holds on the second test. So what we ended up with is up, we go right through the 61.8. It spends very little time on the following candle testing that area again. We go back up to the 50, it's a rejection, it dips below the 100, and then we have favor at the 100, where you get overlapping Fibonacci levels, and then off we go. So now that I have a period low and a period high, I know what we could do, and this might be a little, you have to do whatever's comfortable for you, but what I would do, instead of drawing it from period low to period high to period low, here, I would draw it from here. It's just a matter of preference. Why? Because this looks like a knee-jerk reaction. This particular very deep wick candle could have been an after hours or a pre-market where 5 shares are traded. And then there's the price. I don't know. But it looks to me like this is more of a stop loss type of candle overall in the bigger picture. This is a defined candle that I want to take a great deal of note on. Why? Because look, it made the entire move inside the 100. The 100 to a 0 twice. You have this entire move right here and this entire move right here. We covered the whole span in a matter of 2 months after this. So it's just me. I would prefer to draw it from that level. I hope that makes sense. So if I leave it there and take this one out, because I no longer need it, I now have a period low to a period high to, I'm going to call it a period low instead of this. Where can I set my targets? Again, for a retracement at this level, resistance coincides with right here. I'm trying to get around the zoom thing, and it's a little bit in my way on the drawing tools here, but there we go. Okay. This would be where I would take profit. As we can see, this thing didn't waste any time. It went right through the 61.8 and then some. So would I take profit here? Yes. Would I get back in? Absolutely. What's above here? Where's my resistance? I don't have any. Everything now in this particular situation on EMD is all theory. It's all about what's my emotional level. But now look where I went on this same move, period low to period high to period low. If I drew it from here, right at the 161.8. And it spent 0 time wasting to get up there. So now I've got a few overlapping Fibonacci levels that I should be looking at this point if I'm in an AMD trade. This is clearly one, 161.8. And now I've got an overlapping level right in here, the 50 and the 161.8. This box, I drew it there because this could be a key area to pay attention to in the future. Not only could it be potential support because it was once resistance, but it also coincides with the Fibonacci level on a potential pull from the first time it blew right through it. Because let's look at it from the bigger picture here, guys. If you're a volume trader, how much volume do you really have at this price level from 58 bucks to, I got to shrink this down so I can see what I'm looking at. Yeah. There you go. From $58 all the way up into $74. I don't have a volume profile in here, but I can tell you it's not going to be a lot. Okay, so it spent very little time going up there. At some point, a volume trader knows it's going to want to fill that gap in. So it's a key area. I'm drawing it because it makes sense. You have overlapping fibs, and that would have been a profit-taking area. So suffice to say, I would consider that for something in the future. Now that we've done that move, we can chart the next one. So maybe I take this and I can do like we did before, edit the properties. I don't want everything in there. And I can also minimize it down and make it hash marks and everything else. Again, you guys have to do what works for you, but I want the key areas, the 50 to 61.8, or if you want to do recurring areas would be a repeated level. Like if your particular ticker that you are looking at likes a 78.6 level over and over and over and over again, don't ignore it because the 61.8 is a normal course where you would take profit. It's just for whatever reason, the algorithms are programmed to do that, and the traders follow right along with it. So don't ignore historical data that you get when you're doing it, and if you're using Fibonacci's to take into consideration with all of the other indicators and volume that you are currently using in your trading analysis. So when you're projecting it, you can get a realistic assessment of what could be different in the future based on the past. Not saying that it's always going to repeat itself. I'm not saying that the same algorithms that we're trading before are trading it today. That could all be a wash. It could all be very different, but you should be looking at those levels to take into consideration with your overall strategy. What makes sense to you, okay? But now we've hit the 100. We clearly have areas where it's retested and tested and tested again. I want to draw another one, right? So I've got the period high, period low to high. I now have a defined period high. Let's call it this, because it's tested it several times. I can go back to the low. I'm going to use the same low I used before. Oop. Sorry, I keep doing that. All right, try it again. High to low. Now we have a new period high. So I can actually draw it off of that. I'm going to actually just use the 161.8 that's already been there. Again, you can't be wrong actually doing it from the actual high. It's just for me, a lot of times, again, when you're looking at monthly candles, I don't know how much volume's there for right now. I'm not going to go back into the history and actually dig in and look. I would just prefer to draw it inside of corresponding zones when they're that close together. I hope that makes sense. Same with these two 100s. This is clearly a zone now that I consider it overlapping because they're so close together. I can draw a box right inside those zones like that. Is that a zone to consider? Yes, because I haven't made this move yet. I made this move. We're this high. And if I know this is a period high and the next candle tells me that, how far low can I go over the course of this month? This would be my first target. And if we go below that, I'm here. I'm buying here. But we actually succeed. It holds, and the following month, test that area one more time. It goes right back to where it was. So where would I take profit that time? In the same box, right in here, which is why you see it, the funky position that this particular candle is in the first place. Because when it broke down into here, right? Because this, I know it's how it shows how it opens and closes, but guys, these are month-long candles. We're not going to be spot on. I mean, I think you can understand this is all kind of flowing from month to month. So let's take this into the daily because now we're all the way up into year. I hope there's no questions on that. I just want to show you the daily really quickly on the extensions. And I'm going to get into a couple more things on spirals, arcs, and fans. It's going to be very brief on that simply because I only use them to determine potential time frames, not price levels, if that makes sense. So let's do the, okay. So now that we've charted off the monthly, we can actually see how this looks on the dailies, with each candle representing 1 day of price action. And we can see how it goes up, where it comes back down to. What does it test here? So we didn't see this because we were charting on much larger candles over a longer period of time. So what we can do, okay, is chart from a period low. We're just going to take this one with the right drawing. Here we go. To the period high. And if we're testing this period low in here, where could it potentially go in the future? Here. If you're bullish case for this stock and you're a Fibonacci trader, it's the only thing that you're really using, you're taking profit just over almost $100. That's where it wants to go for the next target. It's already made this line. Can it pull back from that? If this is the period high, you draw another Fibonacci, because you got a whole move inside here to take into consideration. Period low, to period high, to period low, okay? And we broke right above that 100. You guys can already see. It went right through the 61.8. See a little bit of overlapping consolidation in here. Wasn't sure if we were going to reject or not, but sure enough, broke above, went to the 100, and now this is back in a recurring zone. What's going on right now with AMD? Well, we have this 161.8. We have the 0. We've already tested this area before. We have a 38.2 from this particular move. And if we're looking inside the smaller time frame right in here, the most recent move from September to October, and we're looking at this move, we've already broken above the 100. So we have a very key area going on here where we have overlapping Fibonacci's right in here in this particular section, and a previous period high. Until we get above that, this is telling me, until we can confirm we're going to break out, we're not going here. Where we could go, high. Let me just delete some of these drawings out of here. I think I almost got too much going on. There we go. So period low, high, and then low. We have already charted that one. So now if that's the period high, low to high here, I want to see what we can pull back to for me to get in. Here. Maybe I buy, if I'm trying to long AMD and I'm bullish to this area over 100, my next consideration to buy it, if it's not already breaking out and holding this level, which it could do, is to pull back into here. And I would like to do it in a short period of time. Why? Because if you guys can draw a mental trend line right down here along the bottom, you can see it intersect right in this section here in a very near future, like within a couple of days. So it would be a relatively aggressive pullback, okay, to get into this $87, $88 range. We only have a few days to do it. Otherwise, this is not going to make any sense for this trend line. It's going to break the trend, and we could end up, who knows where. I don't even want to guess at this point. But this would be where I would start. Otherwise, I mean, we could be looking at $80, even $75 if it breaks down. But this is where it wants to go. It wants to go over $100 on the targets that we have projected. And there's no resistance here. So, you know, other than a period high that it's tested, what's telling me that this is a period to sell? Nothing yet. So that's it for the Fibonacci extensions. I hope that makes sense on how to chart them. You're going from period high to period low to the next period high, or a period low to the high to the low. In any event, you're looking for a retracement back to a level that it has already been, or a projection on where it could go from where it currently is. It just depends. So if you're short, naturally, everything that we've been doing, you are wanting to short it from here to cover in here, take some position. Maybe you get completely out. Maybe you want to take some profit and you finish covering down here, or maybe you cover down here where the 161.8 meets the 0, meets the 100 and is a 1, 2, 3, 4 times at this support level it's already been, filling in this little tiny volume profile gap right here. So maybe this is where I cover. Whatever your goal or intention is, you chart it out with Fibonacci's, and you can set your limits and set your areas of interest from that. All right, so now that we've done that part, what I do want to do is remove that. I'm going to stay on the daily, because one of the things I want to do is just kind of show you what a fan looks like. And personally, I would actually recommend you do it from the monthly. So let's just go, well, we'll do the weekly. All right, so a fan is just a period low to a period high. And the theory on the fan seems to be a recurring 78.6 as far as where you're at. Now that I have taken from a period low, I went down here to this $9 range. We're going up to this, what is it, 34 bucks on this particular move, period low to a period high. Where would I take a profit at, and where would I buy back in? The thing about AMD that I have noticed is it really likes a 78.6. I don't know why, but it does. And when it coincides with areas of support that I have already drawn, okay, from my Fibonacci extensions, this tells me if it fails here, I'm out. If this holds, this is a trade I want to be in. Why? Because it's holding the fan. It tests the fan, it tests support. We've got an acceptance. Can I take a profit? Can I start taking profit? Yes. At what point would I start taking profit? Guess what? This pink zone where I drew the resistance from our other Fibonacci extension. That's where I want to take profit at. And I'm staying right smoothly inside this fan until we get there. This fan is the 61.8. Do I take profit? Yes. Okay. I've been taking profit along the way. Pull back into a little area here, what was once resistance now becomes support, and then a test to the 78.6 again. So now we've tested it and passed. We're going to break above, and sure enough, we're going to test that 61.8. What do I have in between here? Nothing. So it's making one heck of a move. Now we're going to go up to the 50 line, another pullback, and as you guys can kind of see here, we're going to go all the way up here, and we're going to test the 38.2. Does this make technical sense for this 38.2 to be tested again at some point in the near future inside of this rectangle that I drew right here in the $100 range? This is going into next year. You could say yes or no. It could go up there right away and come crashing down forever, but that would be a target that I would try to hit if I were long and I wanted to get the most bang for my buck. I would be selling AMD all day and night around $105, every bit of it. For me personally, I'd be out, but that's a target that I would try to get to if I could before the year closes out. Okay. So that's just something to consider when you're looking at it. Apparently, there's some kind of math or algorithm somewhere that agrees with it, because it does have key zones that it goes to across the board when you're using the different Fibonacci's. So that's a fan I did on the longer term, and I use the weekly because I want to see it play out. Can you do a whole bunch of fans? Absolutely. You can do a fan from here to here, right there, period low to period first period high, and then we can kind of see how it played out in here. 78.6. Yep, up, we're good to go. Test it one more time, and then but you're going to end up with so many lines in your chart at this point. Like, I would rather just, me personally, leave it at the one thing that kind of matters the most as a long-term trader on a long-term stock. If you're looking for scalps, or you're just going to try to be in a trade for a couple of weeks or whatever, I still recommend you go to the long-term stock. The long-term chart, and chart it this way, simply because you need to know who you're trading with and against. But it wouldn't be where you're taking profit or where you're setting your targets per se, because you're not going to be in the trade for weeks. Okay. So you would need to go to a shorter time frame and then redo this, but then look at overlapping areas from different fans, the fan from the longer time frame versus the fan from the shorter time frame, and kind of get an idea from there. Okay, this is an area to consider, right? This is an area that, because the algorithms that are clearly programmed to trade on this from back here are still trading this thing. So you do need to consider it overall in the bigger picture on the shorter time frame, because the program is a program. They're not going to rewrite the program for different time frames. It's going to behave in a very similar manner in generally speaking, and it's going to respond to the market basically the same way. But let me get rid of this because I don't need it anymore. All right, that extension. And this is clearly a very key area right here. I would have been taking profit there too, right? It makes sense. All right, so now we take the fans into consideration. I think one more. There's spirals and arcs, and there's also time extensions. We're starting to run a little short on time. Time extensions are really only for points of consideration. I don't consider them accurate. You can look at them for, if you're in a trade for a long period of time, or you're anticipating being in a trade for a long period of time, what might happen around a certain area when you get a zone line at certain ratios. Typically, I found that it can take a few days or even sometimes weeks, depending on your chart, before anything actually happens there. But let's get into what I want to show you here. All right, so this is a Fibonacci spiral. This is the true Fibonacci art in terms of how Fibonacci works from the exponential math. 1 + 1 is 2. 2 + 1 is 3. 2 + 3 is 5. 3 + 5 is 8, and so on and so forth. It's an exponential mathematical calculation. So if we take the smaller and work it out to the larger, I want to take the first period low. If I move it to the first period high, I just stay consistent with the theme in the fan. Do I see areas of interest on the Fibonacci spiral that I should take into consideration? Okay, maybe, right? Possibly. Again, possibly. These are cycles. They're only areas of interest, things to take into consideration. And you can do a billion of these on the chart. Again, I don't use them other than determine potential points that they might have a cycle that could recur itself. This thing was on a really serious uptrend, a really nice tear. You can also go from a period high to a low. So we already charted the low to the high. We'll go to the high to the first period low. In fact, I'm going to do this one. And we kind of see overlapping zones. This would have been an area right in here that I would have been taking note of what was going to happen next. Is it going to stay along this fan line here? Is it going to pull back or what? But I probably, me personally, would not be in this particular trade if I had already saw that you have overlapping arcs in this area until the market, or AMD in particular, told me something. It's a decision was made. And as we can see here, we still didn't know. I mean, weeks went by and we still held this level of consolidation here. It wasn't until it broke above, out of this green zone that we drew here between the 50 and 61.8, that it told me it's time to go long. We've passed above the fan, we passed above the 61.8. I can take a position, and I'm probably going to be selling in the 100 out in the 100% range and where the 50 fan hit. So I would probably be selling this candle, even though it broke above. My profit taking would have been definitely somewhere in this particular green zone. It's still a profitable trade. Can you always get more? Sure. Is that your goal? You set your goal, you set your threshold, you do your own risk tolerance. I'm just telling you what I would do. I don't try to catch the entire move. I only want to catch when I get confirmation from point A to point B, where I think it could go. And that's it. So let me take no, I'll leave them in there because there's not really messing up the chart, because I do want to do an arc. So what is an arc? I use it for time frame. I like it for time frame. It does help you kind of determine, like, from a period low to a period high. Let me show you. I'm going to do the same exact thing. I have it coded the same way, where the 61.8 is green, the 50 is yellow, and the 38.6, I don't know what, 38.2, sorry, 38.2. I don't really use it for the 38.2. I'm looking at the 50 and the 61.8 every single time. And then on this little etchy pink thing out here, that's the 100. So that's 100% of the move in the cycle. Does it matter on the stock is the question. Well, if I chart, if it's using Fibonacci's and ratios at all, it should. We should see some level of at least movement, correlation, or interest inside of this particular spiral. Do we see that? We got period low to period high. Well, here's where we want to go. Here's the 50. It made it there. And when it got there, what did it do? Remember, we still have the fan to consider, okay? And then we still have this green zone, what we drew off of the prior extension to consider. So now that we've made it this high, we don't have this red zone, this red candle yet. Where could it go from the period high if I want to take it short? Well, I've already got one confirmation from the Fibonacci extension I drew a box on, but I also now have the Fibonacci arc telling me that between the 50 and the 61.8 is right in the same exact zone that the 78.6 fan follows along. So now I've got overlapping areas with different Fibonacci's basically communicating to me as an individual trader, this is going to be an area of interest I need to pay attention to. Buying or selling, I need to look at it when it gets there. So it's a target. Does it go there? Yes. When it breaks beyond the 61.8, what does it do? Now it could go to the 100, which is out here. But where? Where in the 100? Could be anywhere in the 100. As long as it holds this particular zone to buy, I would like it to go along the fan. That's why the fan is there. Because if it holds a 78.6 on the fan, which it does, they even tested it right here, and finishes that cycle out on the arc, on the spiral, sorry, the arc is the next place I want it to go. Here it is. All this indicates to me at the 100 now is that the move is made. It's done. Does that tell me where it's going to go in the future? No. This is expired. It's no longer of consequence. I don't look at it anymore. So that's a done, finished move. I can now remove that because I don't need it. I can now do a arc to the downside. So I'm going to take a period high to a period low. You can draw it right in here if you want to, because at this point on this particular candle, guys, this is all you would know. You wouldn't know what's going to happen in the future, but you can still utilize the tools you have given to you from the green area. You had your test to the downside. Oh, I need to draw it from there. It's kind of hard to see because I drew that stupid rectangle in there. There you go. Okay. So now we actually come out and test not only the Fibonacci arc at the 50 line, this yellow line right here, but we actually reject against the 61.8 of the fan. And when that happens, this thing fails and pulls back into the same 50, but it falls inside that entire arc. Do you see how they just kind of made that move in a crest motion in this same time frame? That's why I said I use it for time frame, to try to measure the future move. Once we get there, now the 61.8, this green one, is the next level I want to pay attention to. And what does it do after it gets there? Well, I've got the fan looking to be a trend line, if you will. I'm not going to call it support because it's not. When it breaks out the 61.8, I want to go to the 100 as my next target. But where at in the 100? Again, if I can see it here, I'll be bullish until I get there. Do I know what it's going to do? No. It could go up or it can go down. We see that it went down. I'm not in trade. I'm done. I've already taken profit all in here before I even got to the 100 because I know when I get to the 100, a decision has to be made. Now, it went up a little bit, but it came right back down and actually would have ended up stopping me out or taking away some of the profit that I had in it. So when you get to certain key levels, you're going to want to be selling, right? So when do I sell? When you get to key levels. And when do you buy? When you get to key levels. There's really no point in trading the noise in between because all you're going to end up with is just a period of consolidation. So We test the 78.6 again, and up we go. So we could draw another Fibonacci. And on this particular one, I could do a billion of them in between here to here to here to here to here to here. I don't want to do that. What I would like to do is just focus on the bigger picture stuff. Here, this is clearly an overlapping Fibonacci area. Hit the 78.6, broke above the resistance zone. This was a decent move. Came all the way up to the 50, didn't hold, and failed. I want to draw that. So I'm going to draw that one because it's a defined move, and then try to project out where we could potentially have gone in the future from here to here. Where do we go next? Okay, if that's the high, which it is, 50. Okay, now it moves up in the crest, tests the fan again, fails the fan, fails the 61.8, and where do we go from here? Well, here's the 100. But we also had that fan that it breaks above, and it broke above this particular support zone. So I'm now looking at this particular arc as simply a measure of time. From period A to period B, when do I get out? When do I take profit? Well, when it got out of here, when it broke out of the 61.8 arc here in the center, I didn't see a need to be in the trade until it broke above here. So the arc doesn't mean anything to me at this particular period of time. This arc, the 100 line, might. So when it breaks above the 100, do I start taking profit here? Most likely, okay, because the cycle is over from what I saw before. Can you draw a new one? Absolutely. I can go ahead and get rid of this one, and so on and so forth, okay? If you guys want to see it over and over again, you'll see repeating patterns. Like I said, you could pick a billion of these. Your entire chart will look like a huge swirly pattern, and it can get relatively confusing. Me personally, I've done it so long that I can see them on the chart without looking, but I just leave them. I don't care because I can look right past that and see what I want to see when I'm looking at a stock. So whatever you do, if you want to change the size, you want to change the colors, if you want to get rid of them, if you want to change, uncheck particular, go here in the side and just uncheck what you don't want to see and get rid of it. You could do that too. Then I take the white circle out of the middle. But the whole thing is when I take a period low to period high and I see a recurring move, this is an overlapping spiral with an arc out here into April the 5th. What does that mean to me? Nothing other than around April the 5th, if AMD actually happens to break up and go all the way to $115 a share, not saying it will, but if it does, again, another period that I need to take into consideration, right? I have some overlapping stuff there. Where else do I overlap? Right here, okay? Right back down in the period of consolidation over here. This is helping me strictly for the time frame, that's all. If you have a defined measured move, you might say, well, why wouldn't you just take it from this period here? You can go from here to here, but they had a whole period of consolidation where it really didn't necessarily move up or down. It just kind of went sideways. So that's why I drew it from a more defined period low to a more defined period high. But I wouldn't say you were wrong for doing a whole bunch of arcs in here. It's just, again, it looks convoluted. And it doesn't really help me set target for the bigger picture because the guys I'm trading against on this could be on the monthly, right? And if they're trading on monthly, what are they looking at on that same exact spiral in the time frame from period low right to the period high? We can kind of see it. I got to move the candle just a little tiny bit here. There it is. Sorry, mouse fingers. Okay. I want to be looking right in here. Key moment. AMD, if I'm out in the trade at that particular period of time, monthly and the weekly, and I would assume the daily are all going to kind of overlap at a key area of interest. So do I know what's going to happen there? No. Do I want to be in the trade there? Probably if I'm hedged, but other than that, no, probably not. Again, it's just an area to be to take into consideration when it comes to time frame on the spirals and the arcs. And then the last thing would be if you want to do the time ratios, again, like I said, they don't necessarily mean something is going to happen, but I can take a period low to a period high and C. So we did a period low to a period high. I'm using the same one here, okay? And what would happen at the 161.8? Do we have a decision? Looks like it, okay? Let me get rid of some of this stuff here. Move drawing, okay. Good. Now we can see it here at 261.8. 428.6. It starts to get a little bit asinine here. It's 685.7. Right. So once you get a move that's made outside of that, I don't know that I would necessarily consider. That's why I showed it to you last, because I really don't use them. There are a few stocks that are very, very well known and traded that are parts of a lot of ETFs, like Starbucks, for example, that I love Fibonacci's on. They tend to work incredibly well on there, and all the Fibonacci's. So my Starbucks chart, I don't want to show it to you, it's probably going to crash my computer. It's like a Fibonacci nightmare come true. Like everything is all over the place, but it makes sense to me looking at it. Now, I can't see questions because I don't have the YouTube thing up. Does anyone have any questions on, let me try to open this up here so I can see. Any questions on what I've shown so far? I don't know. Can someone read it to me? TJ, you have any questions?
Yeah, no problem. As soon as I see a question here, I will let you know. And John, you can just take a little break, and I'm just going to wait for people to post questions on the live chat.
Oh, good. I'm going to get some water.
Definitely. So if anyone has any questions, feel free to post it in the live chat. I'm not as proficient as John is on the Fibonacci drawing sets, but I can answer some of these questions. So one question we have from Marsh is that, John, your Fibonacci fan seems to be different from the default, but technically it isn't. It is the same one. He just had it color coordinated the way that makes sense to him, so it attracts his eyes.
This is my settings. I leave the ratios alone. I would not mess with the ratios. Guys, if the Fibonacci doesn't work from what you're seeing on the chart, like there's no correlation to the actual chart, don't use it. It won't help you. Like if you have like a penny stock that's been, trading at a cent for forever, there's nothing to chart. So you have to use it where it makes sense to do it on something that literally you can look at this chart and kind of see that there's something going on here. Okay. When you guys become familiar with Fibonacci, I don't need to draw a fan to see the fan. You could see the fan in your mind just looking at it. It's going to be the same for any indicators that you'll ever use. You can see where the volume would be, right? Where's support and resistance, simply by looking at candles. I'm a volume trader. I don't use this particular default setup. because it doesn't have the volume stuff on it that I look for. I use equal volume candles, by the way, if you were wondering. That's just what I prefer. And I draw support and resistance zones based on that. Fibonacci's are not support and resistance zones. Fibonacci's are just areas of interest, potential targets where it could go after it's already been somewhere else. If you do an IPO, I'm going to caution you, don't throw Fibonacci's on it until you get a defined move. Don't try to pick the top and see what the retracement is until you know for absolute certain it's the top. How do you know? You'll know. It'll fall below wherever it's ever been, and it's not going back there. Okay, so you'll already have a defined top. Where can it go from there? Typically, again, we'll look at the 61.8. There have been a lot of IPOs or newer tickers or something like that where people keep getting squeezed out of positions. Where a Fibonacci could help you in those particular cases is after you have the initial move made to determine where it could potentially go. Always assume the worst case scenario. This is not trading advice per se, but for me, when you get something that's overextended, typically the drop is so much harder than the move up, and it's more rapid because there's a lot of panic involved in there, and there's not necessarily a lot of support or buying interest because it's already gone as far beyond as it was ever intended to go. So these are the default settings, and you guys can add a curve. Okay, so if you want to add another line, I wouldn't, because it doesn't make any sense in the fan. If a fan goes beyond the 100 line, it's done. The fan no longer exists. Don't bother adding additional Fibonacci ratios, like 161.8. That's crazy. Can you do it? Yeah, you can do whatever you want. It's your indicator. But all you're going to see is a weird line that comes down here. And again, I don't need it for this chart. So I'm not going to bother making something that doesn't need to be. I do suggest you color code, enhance, or modify your indicator to your own comfort level and your own comfort zone. I do make another suggestion when you are doing any indicator. If you're using longer time frames, you try to differentiate that particular indicator. You can't set it as a default naturally because you're back to square one, but you could go through all the interesting charts that you're looking for and leave a default and chart all the monthlies. Then go back to the same tickers so you don't have to mess with the defaults. Change the defaults and then do all the weeklies. Change the defaults, do all the dailies, so on and so forth, so that you're not constantly changing every single particular drawing on every single chart every single time. It could be rather tedious. So it's something that you could do, and it's something that makes sense to me. But your key areas, I leave it the 5 and the 61.8. I make them a little more bold. I make them a different color. This is my profit taking for me. That makes sense. Yellow is caution. That makes sense. If you want to set these as red, that makes sense too, maybe for you. I like purple because I already have a bunch of red stuff on the chart in the candles. So it just helps me to kind of see the color coding and the defaults that you have for your support zones that you would draw inside that Fibonacci. Make whatever color makes sense to you. I wouldn't make it green or red because you're kind of hiding or smothering out candles and lines. So just make it something that makes sense to you if you're going to draw zones at all on your chart. I recommend it. I think it makes sense. They often come into play again in the future. I think there was something else I wanted to say. Was one more question. Go ahead. Any more questions that came in?
There is some more questions for you. So.
Oh, RSI.
10. Oh, yes, that one.
Okay. Can you do Fibonacci's on RSI? 100%, absolutely. Okay. I want to do the weekly. All right. So you would do period low to period high. All right. Let's do same thing extension wise, guys. If we're looking, this move was made. Okay. So we went from period low, a high to a low. And we know this particular move right here was made. And we wouldn't know that until it failed. This part right here starts to fall down. This is ultimately where it could go, the 50. So what I would draw this a zone, yeah. Does this always mean it's going to go to 61.8? Absolutely not. Do something that's consistent with what the chart tells you. So if it looks like the 50 is an area of interest in this particular area, it would probably repeat this same type of behavior again in the future. It could. My own personal default RSI has the lines, instead of 70 and 30, is 61.8 and 32. Well, I got 60, I think it's 62 and 32 because you have to make it a flat number. But I made Fibonacci lines inside of my RSI instead of 70 and 30. Hope that makes sense. But let me remove that, because then we had a period low to a high to now a new low. Does this matter? Does this tell me anything? So don't be afraid to utilize it for, maybe taking profit on a move, but it has to fit in with your trading strategy, because from here to here to here, once it blows through this level, and it looked like it had absolutely no struggle doing so, the 100 lines where I'm going to be taking profit, and that's makes sense here. And they looks like would have been a pullback on the chart above. Not looking at the chart above, but I do use Fibonacci's also on the indicators that make sense to do so. Relative strength is one of them. At the default settings that it's at, I prefer exponential over Wilder's or anything else, but you got to use what works for you. You can't use what works for me because you don't think like I think. So if this makes sense to you, and you see a repeating recurrence in a trend of where it tends to want to go, then maybe utilize it or consider it in your trading strategy. Okay, that's all on that.
And John, we have one more,
Yeah.
a few people asking this
Go ahead.
same question, which is, which time frames do you use the Fibonacci's, and would it work on, let's say, a hourly time frame or a 15-minute time frame?
Yeah, you can definitely use it on a smaller time frame. So we're still on AMD, okay? And look, here's the 161.8 from a whole nother time frame that we've already charted. So while I'm on this, I can actually see two other Fibonacci levels on this. So all I'm going to do is the same type of thing. It doesn't matter how you do it. It's period low to period high to period low. Low to high. This is just a long period of consolidation right in here. Looks like we had another test down. So until I get this final test, well, let's go ahead and draw that. So we've had this move. So here we are on, what is this? The Friday afternoon. I get this deep wick candle here, and then we move up past it. Where would I want to take profit? Well, I'd want to take profit right in here, between the 50 and the 61.8, 88 bucks. So I've gotten in around 87.06. I'm gonna try to get $1 a share out of it, but if it runs up beyond that, great. Okay, but then I'm gonna start taking profit off the table here. Now, this is a little bit interesting because on this particular day, it literally just gapped. It just ran. So up we go. And it ran up so fast and so hard that it merited a pullback, and sure did. Like, it literally went up past the 100, was most likely taken short, taking profit, everything. And then when we had that move, we don't need this anymore. This is done, okay? So we've already went period low to high to low. Now we have an intraday period right in here, this particular move there. So where could I go on that particular move? So we have a low to a high, and now I have the low, okay? So on the retracement from the low, we go right into the 5061.8. Would I be taking profit here? Yes, and that's exactly what happened, which is why the candle looks the way that it does. But the following candle, and if you're looking at literally 5 minutes, guys, this is just one seamless move. Blows right through the 61.8. Goes right through the 100, right past prior resistance zone. And this is where I would be looking to take profit in here, Well, it goes right back to this 161.8 up here on the longer time frame. What does this tell me? It tells me that whoever is trading AMD is probably using a longer time frame as their primary time frame. They're not charting off of 15 minutes. Their intentions with AMD are bigger than mine. My intention is to catch some money today and get out. The people who are controlling this have a different intention than I do, because we go up in here and we follow this zone right in here. So the shorter time frames and the longer time frames agree between this area. So what does it do? It moves all up and down this area, okay? Until it eventually breaks out and above with some level of conviction, right? Because it literally just kind of gaps up into here and fills this area, and up and off we go. But yes, to answer your question, you can absolutely use it at any time frame, because guys, if an algorithm that has Fibonacci's programmed into it is trading a stock, it's an algorithm with Fibonacci's programmed into it trading a stock. That simple. I don't care what time frame you're using, the programming that told it what to do at period A, B, C, D, E is there. The program is not going to change. You understand that? Like, I'm not going to go back and take the programming just on shorter time frames. Oh, well, let's not use Fibonacci's now because we're on a shorter time frame. We're still using a longer time frame, Fibonacci's, from other from programs, because the guys who are using this are on longer time frames. They're not going to go in and change what they're doing. So that's why you're seeing recurring ratios that you'll see over and over and over again. And one thing, if you notice what we looked at earlier when we were looking at the monthly and the weekly, that AMD has a habit of breaking above the 100 by a hair. Okay. Why? I don't know. It could be a lot of different things. It could be a potential squeeze. Like a lot of people would be figuring, I'm going to take it short at 89.52 because it's already rejected. And all of a sudden these people are, having to cover, and it catapults it into a whole nother Fibonacci ratio. There could be a lot of things going on there. I don't know. I don't trade AMD. As far as what happens, I'm just saying when you chart it, you're only looking at areas of interest. Should you be in the trade at that time? It's your account. Okay. Once I've hit my targets, I'm done. I'm out. So I don't look at it again until it gets to another target. And then I'll look at it again. So this would have been a target, 161.8. This would have been a target, 161.8. This would have been a target, 261.8. And all of a sudden, now it's just move up and down here in this zone. And until it breaks out, I don't know what to do next. So your trades would have been above this 94.36. And it's clear. Okay, on this particular candle at 15 minutes, it runs up here, comes back down and closes. Okay, the next candle on 15 minutes has a little bit of a test. And as it runs up, this is where you're long. I'd be long right in here and let it run till where? I don't know. Till it feels like greed, then I start selling. So let's chart that. Okay, period low to high to low. Let's put in, where would I sell? Low to high to low. Okay. In this zone, that's a beautiful move. That is huge. It blows right through. So here's your 61.8. That's why you see these candles again, profit taking. I can't blame you. That's what I'll be doing too. But when it covers, it completely blows through that. This is where I'll be also taking profit. Again, it runs right through that again. Do I anticipate catching the whole move all the way up here at the 161.8? Unless AMD is curing cancer and solving the problems of the world, probably not today. All right. But again, you got to trade your own strategy. But when it breaks back down below the 100 level and defines this is the high, we can now draw the period high to the low and to the high. And then where do I take profit if I'm short? At this point, I'm out of the trade. So let's get rid of this one. Now where can we go to the downside if I'm short? All right, so we go right, punched right through it. It spent no time deciding whether it was going to hold 61.8. It came back up and tested and rejected it. Is it going to hold 100? No. Are we sure? Yeah, we're sure. Okay. 161.8, there's my next level. Guess what? I have a recurring overlapping Fibonacci level that I need to pay attention to from another time frame. All right. As you guys seen the pattern here, right? Now, what was once support is now resistance. So I got overlapping fibs here, which was once support, is now resistance. I would take a rectangle and draw it right in here at this 92.79 level. And until it breaks above that, I'm not in this trade. And as far as it wants to trade sideways or whatever it's doing right here, that's fine. I don't know if this is the low. So I am not going to put a Fibonacci high to low to high and put this as a low, anticipating it can go north, because I don't know if this is the period low yet. Let it define itself. Okay. One thing that I can't caution enough, do not try to get ahead of yourself and do not try to get ahead of the market. It's all speculation. And if you start marrying that precept of, oh, this is a period low to a high, and this is going to be the low, and we're going to go up here, you're doing it wrong. I'll tell you right now, you could lose a lot of money. Please do not do that. That's trading advice, because it's not telling you to take a position or not. Just let it play out. You're not going to determine which direction this thing is going to go. Just do what it tells you to do. But I would estimate it's going to go above here, the 1979, and move up potentially to my next target. And I would do another extension to figure out where that's going to be. If this defines as its low, you go ahead and do that. Okay, then you can go ahead and draw it here, here, and here. Then you could say, well, John, how do I know if this is the defined period low? You'll know, because it's going to break above the resistance zone, 92.79. Okay, which is also another Fibonacci level. So when it breaks above this, can I take a long from, say, $93 to 93.30? Yeah. If it fails it, I'm going to stop out and that's it. How much money did I lose? Probably not a lot, unless it's moving super, super fast. Okay. It didn't work. But if it runs above this, and we've already seen several times, it likes to go above the 100. This would be my next target right here. 94.35. If I'm trying to milk this thing for everything it's got, that's probably going to end up being the top if this is the bottom, based on what we've seen in the past only. But I wouldn't be in it beyond that, expecting to go here and here, because I don't know. But I would be taking profit all along the way. I hope that makes sense.
Yeah, and John, we have another question. In regards of looking for confluence, can you use volume profile to correlate with fibs as targets?
Yep. You should.
Thank you.
You absolutely should be doing that. So I was saying earlier, I don't have the volume profile on here, but I'm going to see if I can bring it up without crashing my computer. Okay, hang on just a sec here. Let's go to the monthly. No, we'll go to the weekly. I don't want to do too much because I don't want it to be really mad at me. It's funny though, when you zoom out, guys, that little tiny move that we made looks so big. It's not. All right, that's this little tiny Fibonacci extension over here. So I'm going to remove that out of there. The people who are trading it, again, if we're using this as the indicator where we can go for a long position, follow these guys, okay? Until it proves otherwise. Now, if you want to take little scalps throughout the day, the Fibonacci's are great. Throw them in there. Get your 30 cents a trade when it breaks for certain zones or whatever. If you can get $1 move out of it, that's awesome. You're doing great. But if your ultimate goal, like mine, if you're adding this into a portfolio, you're looking to swing it, you're setting zones based on a longer time frame, because it's just too many parts to try to manage multiple tickers on shorter time frames. It takes forever. So let's do the volume profile. So I believe it's study.
And John, just a quick question while you're doing that. Do you include the wicks when you're drawing your Fibonacci?
Wicks, the candlestick wicks?
Yeah.
I use equivolume. So if you're looking for like support and resistance zones or where those rectangles are, I don't use wicks, but let's call it a wick because it's on an equivolume candle. If you guys are familiar with what it is, I can show it to you. But let me just do this real quick here. So the volume profile is right here, and I hate the default, but I'm going to add it in anyway.
Me too.
Okay, and then I'm going to remove the RSI out of there. Yeah, so I absolutely hate the default, but it is what it is. If you look at the profile here, where all that volume's at, you look where the 61.8 and the 50's at, and what it did here. Remember how I talked about this not having any volume here on the monthly? We're on the weekly. You can see it. I mean, it's very clear. You can look at the candle. It spent no time here. How could it have a lot of volume here? All right, you had less than 2 weeks for it to stay inside this fan zone. So when it broke out and up, this is your current area of interest to buy. Let's call it support, which is the bottom of the profile, until it's not, until it breaks down into this. And you have overlapping zones here on the Fibonacci fan and the arc, both. I would be strongly considering this particular stock to touch this area as a possibility in the near-term future. This is looking at April, all right? Or up here. I think we talked about this earlier, right here. So what direction is it going to go in the future? I don't know, but I'm going to chart this out as areas of interest. That's all. So this is the volume profile. If you guys wanted to see what it looks like on the weekly, that's it. So does it matter? Yeah, of course it does. And what you have here going on, it could be building a base, right? Just finding support and growing a profile until it doesn't. But I would anticipate AMD at some point filling this pocket. It's a target now. This whole area. There's no support below this line at 72.96. Once it breaks down here, who wants to buy it? These guys down here, because they bought it before, anywhere in the $50 range. But I want to see it test the top of that profile first and see if we got buyers there before I make a decision. So that's just using Fibonacci's in conjunction with volume profile. Are there key areas? Look where the lines are. You tell me. 61.8. It gapped right over the top of that. Is that a key area? Yeah. So is this 161.8 probably valid if this is valid? Yes. Does it touch the Fibonacci fan? It does. So there's a lot of things that are proving itself with validity in terms of are Fibonacci's present? Are they being utilized on this particular stock? Does that make sense?
Yep. And we have a question from Up to Me. Do you perform different time frame analysis to find time frames that adhere the best when determining like a time frame to trade it on? I guess in terms of like the Fibonacci levels.
That question's for you?
I think that's questions for you.
Oh, I'm sorry. I thought the question was for you. All right. Can you repeat it again? Because I didn't realize I was answering it.
Oh, you know what? I'll just repeat the whole question. When looking at a new ticker, do you perform different time frame analysis to find time frames that adhere the best, attempting to determine which time frame people are trading?
Yes.
Against you are using? There we go.
Yes. Absolutely. On a ticker like AMD, where there's going to be a lot of people who are bullish on it clearly and have been, that it's a very popular stock that a lot of people are familiar with and a brand name that people understand. When you have stuff like this, like a Starbucks, a household name, Tesla, anything along those lines, I would start the longest data you can possibly get, as far back as you can go, and start your period lows to your period highs from there. Why? Because the people who started buying that stock way back then didn't just stop. All right, they've been bullish since day one on AMD. You can't tell me that the people who are buying AMD at $9 went, nah, I don't believe in AMD anymore. No, they're still hanging around trading this thing. Okay, at what period are they taking profit and buying back in? Is what you need to ask yourself, and that's kind of why you're starting at a longer time frame, is to determine what are they going to do, because they're not selling every single day. Okay, they're not selling every single little tiny pop in a 5-minute candle. They're looking at AMD from the bigger picture, from here to here. What am I going to do? Especially if you're big money or a market maker, or you have AMD as part of an ETF, it's impossible for you to sell 1 million shares in a day and not just flush the price down, right? So you got to be real smart about how you do it and when over a period of time. That's why we're seeing what we see. That's why you see movement in the market and a lot of chop sometimes, or a lot of indecision that's made, because there's stuff going on at that period of time. But you would know that in advance if you're doing a series of Fibonacci's in conjunction with everything else that we're looking at. Here's a really good example, is this little area right here before we had a really nice move, okay? We built a strong volume profile. We had I drew this zone because this was the 61.8 on an extension. So we drew this, and when it tested it and broke out and had that fan into consideration, we had a lot of stuff going for us, okay? We had volume support based on the profile. We had the fan. We had broken above the prior resistance zone, and we didn't have anywhere else to go except the next level on the fan, right? We hadn't had this arc, all this, none of this happened yet, okay? So how high could we go? It ran. I mean, it ran all the way up until 52.59. And at this time, there was no profile here. It was just starting to build, okay? So it runs up, pulls back down to basically the value area. How would you have known that's where the bottom was going to be before it launched again? I think we already drew this out, but I can draw it again. If I had a Fibonacci extension, period low, right, to a defined period high. And if I drew it again, right there, we have overlapping fibs yet again, okay? So 61.8, I'm taking profit. Well, guess what's going on here? The same exact thing. A lot of noise because there's a lot of profit taking movement right here in between this. And we saw this on the monthly time frame, this area. So I could take that same box, guys, activate drawing, and just make it bigger and encompass this entire area. And for me, I would make this, if I'm long, like I would make this a no trade zone, where you have areas between, I'm taking profit here, I'm taking profit here, from two different time frames, all trying to decide. That's why you're seeing this, okay? That's why you're seeing all this movement around going on in this whole area over a period of weeks. It just sits flat. It comes down here and tests this zone a few times, etc. And then when it finally breaks above and out of the no trade zone, we're good, okay? We can long, we can stay long. Can you take profit here? Yeah. Can you take profit here? Yeah. You could profit to infinity. If you got to trail stop it, you could. But the point is, I could draw off of the fibs where, and this was from knowing the past, okay, with the past, where we could potentially go in the future. Until we broke out of this 61.8, this wasn't a long. And if you want, if it's your goal to sit into a stock, for 4 months until it breaks out, you're not a day trader. I can tell you that right now. But if your position is to long and just accumulate because you're a long-term bullish on AMD, then you'd buy this whole zone. Repeated times, you had this whole area tested you multiple times to buy in. And if you wanted to buy in later because you were late to the party, no one's going to be mad at you for breaking out. This is a breakout. This is good to go. It's a breakout of resistance zone. It's a breakout of the fib zone, and I would be long. Does that help?
Yeah, definitely. And I have another question here from Financial Impact. When would you use a Fibonacci retracement versus a Fibonacci extension?
So a retracement, I would use it on a longer time frame, bigger pictures type stuff. Now, an extension is just a retracement, but it's drawn from a period low to a period high. It doesn't go high, low, high, or low, high, low. Meaning we're not looking for a future projection. We're looking for it to come back only to where a place it's already been. If we did it on AMD, for example, and the reason why it would be very difficult to do it this way is because I would have a billion of them on this chart. Let me show you what I mean. So this is the traditional Fibonacci retracement, okay? You draw it here to here. This is not the extension. So a period low to a period high, and then you're going to get a period high to a period low. Oops. Okay. So if I'm short now, meaning it's already been here, I want to see where it can go the other direction, retracing. I'm going to estimate in here. Okay, that's the 61.8. It broke below and hit that fan. Interesting. And the arc. This isn't necessarily a particular retracement that I would leave on the chart, because it's not trying to project everything else that the Fibonacci's are telling me from what we've already gone over. I hope this makes sense, because if it breaks below the 61.8, all this is doing here is just taking out people's stop losses. Everyone's trying to buy the 61.8. Out, out, out. Everyone's out, because they're not considering these other things here, the arc and the fan. This is all kind of coinciding with one another, plus an area of support. All right. So there's a lot of stuff going on in this area that, if you're only using Fibonacci and you're strictly using retracement, you're probably going to end up getting stopped out repeatedly. And we see the evidence of that. Out, you're out, you're out, you're out, you're out, you're out. And it's not until it finally breaks above where it was that we can be long. So we would remove the drawing, then the period low to the period high. And where we would go from there on a pullback is what I would want to know. Okay. Do we get a pullback? No. That's why the extensions are working inside this. This fan was key. Okay. The fan was key, as well as the area here of support and off the other extension that we drew. The retracement is telling us we'd want to buy in here if it broke down below the 50 or touched the 50. It's really not playing out. So for me, I don't want to use retracements on shorter time frames. I look at as more of a bigger picture, meaning actual period low. And I know it's going to look crazy, but I'm going to take the actual period low and I'm going to move this all the way out to the period high. I've cautioned already on this before and why I didn't put it on the chart. I don't know the period high. And you could probably say, oh, right here, my takeaways, there it is. Well, how about this? Well, is this the high? Is this the high? What's the period low on this chart? Is the question. Is it down here? Yes. But do I draw it from there? So it's for that reason, there's too many questions that I have to answer that I wouldn't put it on AMD. Okay. I hope that makes sense. If you want to do it that way, because you're more familiar with it, great. But try to tell me where the low and the high is on this chart, and I'll show you where to put it. That's kind of the question. Let's pick something. I don't know. I don't want to put on something we've already had. How about something that's been around for a while? Give me something real quick.
How about SPY? Because we actually had a question if the Fibonacci tools can be used on ETFs like SPY.
Well, as you can see, I already use it, so.
There we go. That answers that question.
I didn't want to mess with it too much with the defaults, so it's already on there. Absolutely. I have noticed on SPY, guys, 78.6 is just a recurring area of interest. It likes it. I don't know why. It doesn't care about the 61.8. I don't know specifics of the reasons why. I could only speculate, so I don't want to speculate. But as far as what it does there, that'd be it. So period low to high. If you want to do SPY on a Fibonacci retracement, you need to know the low or the high to the low. So in this particular case, I'll go ahead and remove this because I really don't need all this on there. Remove drawings. There we go. Bye. Okay. All right. So if we have a low to a high, or high to a low, okay. Where can it go? There. That's all you'd see. When it gets to the 61.8, you'd be taking profit. Okay. And what did it do? It gapped. It just took off. It said, forget it. We're done. Once it goes above the 61.8, like I already said, SPY likes the 78.6. I just see it as a recurring pattern over and over and over and over again. So I'm not saying that you need to be taking profit at 78.6 or set your targets there. You set your own targets, but it generally tends to like to try to test the level. Okay. If history repeats itself. And when it does, you can see it. It's pretty clear. And when it breaks above that zone, you're good to 100, which it did. Went right above 100. Take anybody who was trying to be long is taken out of the trade. Anybody who was trying to be short was taken out of the trade with this candle. Long and short. You're all out. Now we got to actually make the move back into, this is a pretty clear fan. Can you guys see the fan in your head right now? I hope you can. It's a pretty sharp one. So that's a period high that I drew it from right here, which is also the area of the 78.6. It could very easily just keep doing this right along inside this fan. If it fails this fan, the odds are it's going to try to touch the 78.6 fan right here at some point. At what point? I don't know. Okay, it could be up here. It could fail and just drop back down to here. It could fail up here and drop back down to here. But ultimately, I would want to be long if SPY pulled back to 339. That'd be the market at 33.90. At least until this fails, and then we have a whole different situation to talk about. But now you can kind of see why I don't do the retracement, simply because it sets me target, but it's not really projecting out the future. Not for me. If I took this out and put in an extension instead, which is what I prefer, then I can do period high. Actually, we need to go back here because we don't have a defined period high yet. That is be what I would do, just like that. So then we have the drop. We have a defined period low. Now, I would be taking profit 61.8, and we did. But again, like I said, SPY tends to like 78.6. And here we go. We're going to fill in this little gap right in here. And then when we break above the 100, we're good. We're still inside the fan. My next target up here. What is that? I can't see the number. Got to move this Zoom thing. There we go. 388 would be an area of interest for me. And another area of interest for me would be 322. Do I know where it's going to go? Not until it gets there. Just areas of interest. And you can do extensions all inside this if you guys want to. So shorter time frame type stuff, right? Here to here to here, and then you're going to do here to here to here, and you have a whole bunch of lines all over your chart. But you can kind of see what's going on right now. This last move from the period low to the first period high to the next period low here, where we had a little tiny pullback, we got some profit taking right at the 61.8 right in here. Did it pull back fully to the 100? No. It's actually at the 100 from the prior area, this one, the big move, which I'm going to marry the big move. The big move is telling me a lot more than this tiny little move in here. Okay, this is more of a short time frames type stuff. So for that to pull back to that 100 and the 61.8 on the fan could be a potential long, and it was. made a nice move right back up into this zone again, recurring zones. When you have recurring zones, I draw rectangles in them. I like rectangles. Repeating zones, again and again and again. You'll see it over and over and over again. And there we have, you can call it confluence, whatever, we see it. You have overlapping fibs. I always pay attention to overlapping fib areas. Here's another one right here. Color code however you want, okay? Whatever makes sense to you.
And John, you have one last question here, and then we'll wrap it up. How do you determine long or short positions based on extensions? Based on the extensions, and are there any other indicators that are compatible with the Fibonacci drawings?
Yes, there are a lot of indicators. So we'll do harmonics on another training session. That's the XABCD pattern, Elliott wave theory. It's getting into a little bit more in depth of direction and projection as far as ratios go. If you guys like, what is the trading platform that's web-based, TradingView, I believe, has it already built in, it's already color-coded, and you can use the harmonics from within that. And that's probably what we'll use in the future, because Thinkorswim doesn't have the capability to do it as a drawing. Okay, maybe a study or something, you can modify it or create something if you were technically savvy on programming, but it's not a drawing that's available. We're working within the default tools that we're given. Okay, so that in consideration. What other things does it work for? As you can see, I drew the Fibonacci on the RSI earlier. If you can draw a Fibonacci on it, any indicator, okay, whether it be true strength indicator, relative strength indicator, stochastics, whatever you prefer to use, if you can put a fib on it, period high to period low, it looks like it makes sense to you, then I would use it. It's got to make sense. And then when you correlate it with the chart above, and it all kind of works in harmony with one another, then use it. If it doesn't, don't. Fibonacci is only a tool to help you get an idea of what might happen at particular price targets, particular periods of time. That's it. It's not support, it's not resistance, it's not an indicator of what you should or should not do. It's a place of interest. Wait till it gets there, see what's going to happen, be patient, let the trade develop, make a decision based on that, assess your own risk and assess your own reward. So what you can do with Fibonacci is pick a risk to reward ratio that works for you. Mine's 5-to-1. For every dollar I'm willing to risk. In other words, buying this candle right here. My risk, if it breaks below, it's a catastrophic failure below this fib fan. This fib fan right here. This is a catastrophic failure below the 100 line, below support, below the 61.8, and we drew all of this. This is a failure. I am stopping out immediately below 317.92. I don't want to be in until we can retake that level and prove that I'm going to be in this trade. Once I can hold this level, okay, so then my target goal would be up here, right? 50 to 61.8, right in here. And guess where it went? There, right in between it. So to take the risk here, to stop out from here, buying in this, you do the math. 324 to stop out at 318 is a $5 risk. Can I make $25 from 324 to 353? Yes. Yes, I can. So it's a 5-to-1 risk to reward ratio. This is the trade I take. I hope this makes sense, guys, because this is what I do. It's pass or fail. from here. That's it. I would no interest in being this trade if it breaks down below this line. There's just too many different things telling me that this has to be support or it's not. And later on, after it makes that move that I would hope it had made, where I took profit, it comes right back down to it again. This time breaking through the green line. Okay. Now I need to wait to see it retake it. A lot of traders will be like, oh, support, buy this. And that's a big risk. I don't know what it's going to do the following day. It does recover. But then if we start to look at, now we got a whole period of consolidation here. We start to bounce around here, left to right, up and down, forming resistance and now forming support. It's going to go on forever. This could just keep going sideways the whole time until we get all the way up to the fan. I don't know that until it's done, but I've made my money. It hit a target, hit my target, I'm out. That's it. And until it proves otherwise, there's no point in me trying to take a short from here because I don't know if that's going to be the top or not. So find the setups that work for you. I would use the Fibonacci just to help you plan your targets where you think it can go and make a decision. And that's it. And if it works within your 5.5 to 1 risk, if your risk ratio is 3 to 1, whatever you want to make it, whatever you're comfortable with on your account, whatever you want to trade, make the decision from there and set your limits, but plan your trade in advance. Don't chase anything. It doesn't make any sense to chase anything. If you see something running, just leave it alone. There'll be other tickers. You'll find them. I promise. Go chart. Get ready. Look at fundamentals. Look at news. Figure out what you want to do, and you'll be a profitable and successful trader.
And John, just wanted to say once again, thank you. I can't thank you enough for taking the time out of your day to present this lesson. And I am sure that a lot of people are going to be looking to review this lesson. So again, really do appreciate all the support. And if you guys haven't already done it, just make sure you guys like, subscribe, and also join our Discord group. We'll be doing some more lessons going forward. I know Drados is going to be working on one for support and resistance and some technical indicators. And I know John is also going to be doing a lesson on harmonics. So please stay tuned. Take care, guys.
Thank you, everyone.